Hey, it's Mac with PriceActionTradingSystem.com, and it is June 16th, Thursday, and this will wrap up the week. No chart lessons on Friday, so if you follow along, if you're new, then and you're looking for a chart lesson on Fridays, then there won't be one. I usually use Friday to try to get out of here early by lunchtime or so. But anyway, as we talked about yesterday, that we prices probably needed to come down and touch this side of the trend channel. That would be your expectations, and that's exactly what happened. You know, we could hope there's going to be a rally there, but honestly, this is what you would expect to happen. So now that we've closed off of that low and bouncing here, maybe we'll climb out of here. We'll just have to see what happens. But this is actually today's bar. It's after 5 before I'm getting to do this, so we've started the next day, but this is today's bar for this video. And you can see it's very bearish. We closed off the lows, but back inside that channel, so that tells me that channel is valid right there. That support line is very valid, just like that resistance line coming down is very valid. And really, the only difference between a channel and a range is you still have the support and the resistance on the channel if it's down, and if you're pointed up, it would be like this one. It'd be support on this side, resistance on the upper side, and it acts just like a range would. Prices just bounce back and forth between support and resistance, and that's exactly what we're doing here. So perfect price action, really, and this is what we talked about yesterday that we hoped wouldn't happen, but probably would because the chart says it probably will. So I will say that if you look at a shorter term trend right here, we got one. We got a break and a new low. So prices could theoretically bounce out of here now. Now, it wouldn't surprise me at all if we just bounce down this trend line because this thing has been weak. But we're overdue for a bounce, so at least a correction. So hopefully we'll get one soon. But that's a good look at the daily and what we're looking at. And now we actually have some hope that we could get a bounce here. Right now it looks like we're going to, but this is early overnight stuff, so you can't get too excited about that because yesterday I think we opened way up here and it was a little bit positive, and you see what happened before the end of this session. So um, same thing could happen here. We could push lower and maybe the lows are on down here somewhere. This seems to fit really well here, so I'm liking this channel, but we'll see. Let's flip over to the 2000 tick chart and go through the. Okay, and real quickly while I'm thinking about it, I've gotten a couple people ask me about the 2000 tick chart with the new volatility and all the volume and so forth. Originally, the way we came up with the 2000 tick chart is we try to find a tick chart that'll give you an equal number of bars as a 5-minute chart. So in other words, we want our tick bars to take about 4 to 5 minutes to form, and that's how we originally came about that. And over time, that was a 2000 was a really good option, and it seemed to trade pretty easy. It gave you plenty of time, but I don't really change it anymore because now we're probably more. This 2000 tick chart is probably closer to the speed of a 2 or 3 minute chart, maybe sometimes even less when there's high volatility. And several people asked me, well, how come we haven't changed to meet that? And you can change if you want. If you want to open up a 5-minute chart and try to get an equal number of bars and trade that tick chart, that's fine. And some of the newer traders might want to do that. But honestly, I got tired of changing back and forth, and I just got used to the 2000 tick chart. I got used to the speed. I got used to what's going on. You don't want to get it too fast. I mean, if it got down to where it was consistently 1-minute bars, I'd probably change it. And maybe it has gotten to that. I haven't checked it lately, but you'll get a lot if you traded a 1 minute to a 3-minute time-based chart. You probably will get a lot of fake outs, a lot of false moves and stuff. And I still don't seem to see that here. The price action looks still really valid without a lot of the things you tend to get in a 1 to 3 minute chart that just moves too fast, really. So the tick chart just is very different than a time-based chart, and it helps you to see so many more details in the price action. And we're visual chart readers. So the more we can see, the more of the movement and the undulations and the swing highs and swing lows that you can see in the chart, the more information you got to figure out what's going on. So that's why we like the tick chart. That's why we trade the tick chart. Honestly, people ask me, can I trade a 5-minute chart? Well, sure you can. But I'll be honest with you, if you want to trade a 5-minute chart, this is a battle every day here between the buyers and the sellers. And if you want to go to the battle with a knife and me come to the battle with a M16, then that's your choice. But that's about what it's like, if you ask me. If you come to battle trading a 5-minute chart, I'm going to have so many more advantages over. I'm going to see so much more in the price action. I'm probably going to outsmart you every time. And that's just the way it goes. I mean, that's the whole idea behind this thing, is you got to outsmart the smart traders. And until you really understand price movements and the rules that we follow, you'll never outsmart them. So the idea is to learn to read this chart. Prices always have a target. They're always moving to some place. And sometimes you'll read the chart perfectly and maybe still get it wrong. But for the most part, if you know where prices are going, and we can really, to a fairly accurate in the short term, can figure out where prices are going if you understand price movements and you follow our rules that we have in place. So that's the whole idea behind this. I didn't mean to get off on this tangent, but I just thought it was a good time to talk about it. But let's zoom in, go through the trades, and let's wrap today up, because there's quite a few trades here. And this is a lot. I mean, you can see we're trading this mostly down until in here. And then it was kind of mixed trading after that, kind of a range to sideways stuff. And there could be a bigger channel in here, but I couldn't find one that I felt you were better off to trade these shorter term. So even if you found a bigger channel, doesn't really matter. I don't think you could get any closer to the actual price movements than doing it the way I've done it here. So there may always be a different, larger channel, but when you get to those really large channels and prices don't come back to the trend lines, they don't really help you anyway. They might just give you a bigger picture of where things are going, but generally, you may not need that. And I didn't put this, there's probably a measured move here. Of course, we didn't get anywhere close to that. That's the reason I didn't put it on there, but you'd want to watch for that. And the fact that we didn't get down there, that's very telling. I mean, that could mean the rally's coming. We'll just have to see. I'm not going to put my foot in my mouth and say, hey, it's coming, because I've been proven wrong too many times. But it could be coming. So just keep that in mind. The things are in place now for a bounce. And the fact that we didn't make that target on that measured move there, that leads me to believe that, hey, maybe, just maybe, we may get a bounce here. So, but let's talk about the trades. Let me zoom in here where we can see this real closely. And 7 o'clock came just as we're coming up here. There's a higher low here, but there's some resistance right there, and I'm very leery going in long into that. I mean, if you took it, you would expect prices are probably coming back to here at a minimum. But they could, I mean, look, they turned down here 2 times when we should have been going higher, and we came back and tested this low. There is a triple test right here, but I don't like that bar, I'll be honest with you. It closes too close to the center. Either one of those, if you took them as knowing they're high, they're very risky and low probability, then, there's reasons to like them, but there's better trades in that, especially that early in the morning. This one actually is before 7 o'clock, I think, too, so you probably wouldn't want to take that one, but this one's right at 7 o'clock or so. But we move up, we get a break, 2 legs to a new high, and then this is a perfect reversal pattern. Notice how it shoots straight through the EMA, comes back, fails, comes back a second time, touches that EMA, fails. Big bearish bar. The only thing going against this one is it's real close to that low. But after that big sell-off, you'd expect another leg down. I'm going to take that trade every time and hope I catch an important high. And unfortunately, you don't get a runner on that one, but well, you could. It depends on how you play it. So, I mean, if you're playing your runners real conservative, you're not going to get a runner there. And on a lot of these trades, if you're playing them real conservative, you're not going to get a runner on them. So it's just the way it goes. But you only have to get one occasionally, a few of them. Now, if you're trading doubles, Um, I mean, really, you shouldn't probably try to trade runners until you can at least trade. I would say my rule has usually been three, and you can scalp out two and only save one for a runner. But the odds are still that's like 33% runners, and when you lose and you, I mean, even when you win, you still have a 33% loser, and so when you take a full loss, it really hurts you. So, but when you can trade five contracts and you have one runner, and so you're getting 80% of your scalp, and you're only 20% are runners. That really changes your math. You can afford to take a true loss. So, and really, that's been kind of my rule is to trade no more than 20% runners. You need to get to that point. And if you can get to where you can trade 10 contracts, then you scalp out eight, and you've got two runners, and that really changed. It doesn't hurt you so bad to take losses on your runners. So I hope that makes sense. But anyway, we drop on down this um, trend line or trend channel here. Trend coming up, break, new high. I marked that one green. Um, just simply, actually, that should have been red. I was going to say, why did I mark that green? But I just must have clicked on the wrong button. That's a perfect second entry, a break, a new high. We don't have a trend line there, but it doesn't matter. Oh, I know why I marked that green, because this bar was an inside bar. So yes, I did mean to mark that green. So that's the problem with this trade. You have that inside bar. If this would have broke on lower, this would be red. But when it makes this inside bar, it's still a relatively bearish bar, and I mean that's a perfect play out right there. Plenty of room even to this first swing, much less the low swing. So you may want to take that one. If you want to be aggressive, that's the kind you want to take, because it's still a second entry short. Just generally these inside bars. I mean, technically this is your signal bar. If you're new to this, you probably shouldn't take this trade. But if you're an experienced trader and you understand what's going on here, and you want to be aggressive, that's the kind of trade you want to be aggressive on. So I hope that makes sense. There's another second entry here, but again, it's an inside bar, and even this bar is not very pretty. So that looks like congestion, so you got to skip that one. But notice your new low, and you're coming up to first entry, and this doesn't break higher either, but the fact that it makes a higher low when it breaks lower, there's still a second entry. Turns out to be a great move, but you just can't bank on that. And then we're just chopping sideways. You finally get a break here, and I meant to mark this lower high here and forgot it. This is another one. If you want to be aggressive, maybe this is where you do it. Technically, that's a second entry, but this is a range, and it's just like a failed breakout. I'd wait on the lower high right here, and that's where you want to enter. And it's still a second entry, although we're not really looking for second entries when you're going sideways. But this has been a downtrend, and we're just going sideways to the trend line. So the fact that we came up short right here and right here tells you we're probably going to get a break soon, and there it is. And then just wait on the right time. And second entry short, lower high, right off the resistance up here of what was kind of a sideways. That's a perfect move. And it moves to, it's basically two legs to a new low, and then we reverse. And then there's just two legs up. But I'm not crazy about this second entry. It's way away from the EMA. It's another one that if you want to be aggressive, it's probably the kind you want to be aggressive with, but I'm not crazy about it. Okay, my headphones where the battery was dying. I had to switch out. I had to plug it up here. But anyway, second entry short there. Maybe you take that trade. And technically, you can see it moves up. First entry, moves up second. That's clear two legs up. So it's a great second entry, way away from the EMA. The problem is there's possibility of reversal, and I'm not crazy about that. What looks like maybe going to be a failure right there either, because we didn't get back to the trend line. I mean the EMA right there. So we turn back down. There's a lower high here, but I don't like that setup either. It's right into support. You can see it went on down, but we just kind of chopped sideways there. And then you get another two legs up, and you get a second entry short. And look at that bar way away from the EMA. That's the one to take. Easy trade there. and then you get a first entry, second entry that fails. So your entry is one tick below that bar because that's where it broke lower. That's where the failure occurred. But your safety stop always has to go above or below the signal bar. So in this case, it would be above the signal bar, and that's right here. So I marked it here. But your entry is one tick below this bearish bar because that's where the failure occurred. And you probably get a runner on this one. That's a nice move. There's a lower high right there, but it's too far. You can't trade that. And then we're just going sideways here. You still don't want to be trying to go long yet. There's a triple test here. We are coming off the low side of the channel. If you want to be super aggressive, maybe you take that trade. I'm not even going to mark it. I'll just be honest with you. You're gambling when you take that trade right there. We're in a downtrend, clearly right there, a down channel. There's no reason to look for a long yet. So I like the short here. The only reason this one's green because it's a triple test right off a range high, and you still got room to scalp out. The problem is that's a huge bar and it's moved a long way. So odds are you're probably going to get it. I like the trade, but you got to be careful with one like that because you don't have a lot of room to play with right there. I mean, there's exactly 6 ticks to that low. That's enough. That's what you need to scalp out for 4 ticks. And there's exactly enough. So it's close. I mean, it's borderline. You end up getting extra ticks, so it doesn't matter. And you could just keep going lower, but you got to be careful with that one. Then it runs back up, gives you a failed breakout. And technically, you got a new low there. So that's 2 legs back to the trend line. And the problem is it's not a great signal bar. It is a failed breakout. You probably want to wait on a lower high, and you don't get one. It just comes down here, bounces, and goes higher. And then you're just kind of working along here. And you do get a triple test here, but it's just not a good setup. That's a very bullish bar. But then notice what happens. You get a first entry long, second entry long, it fails, and there's that setup again. Boom. And you probably get a runner there again. Nice setup. We come back to the trend line here, but no, I wouldn't take it. And maybe you take this when it breaks higher first and then turns down, because I guarantee you people are bottom picking with the support right across here. And they probably failed here, and they tried it and said, well, oh, we're really going to get it here. I was just a little bit early, and then they get fooled again. So that's one if you want to be aggressive. Maybe you take that. It's just a first entry, but you might even look at this as a double top, so first entry, second entry, and kind of look at it as a failure type trap. It doesn't set up like a reversal, but it still could be considered a failure. Same thing here. You get a first entry and then second entry, but that just looks a little congested, way away from the EMA. You've already got a close outside, and you got basically a tick away from a new low, so it could just make a tick or so there and turn up. So I don't think you want to take that. Drops on down, we bounce, and this is a repeat pattern from one back over here somewhere, very similar to that right there. And you can see we're working up. You get a close outside new high, and this actually breaks higher and turns down. I don't think I would wait to here to go short, but you might take that on the engulfing bar. That's the way I would like to play. If I like playing that on the engulfing bar, breaks higher. You know you got people trapped, and you could get a scalp out of that, but it might not go much further than that. But then you get a lower high here. You could trade that one on the engulfing bar, or even just go short, one tick below it. And unfortunately, we don't get another. We don't get any more down. It bounces here. And I don't see anything. There's another second entry right there. It would have worked if you took it. Technically, that's not a second entry because your new low's here, and you get the first entry, second entry. Technically, your second entry was there, so I guess you could look at that as a second entry. So that is a new low. It's kind of a convoluted one. You need to be a little more skilled to see that, but there is a new low there. First entry, second entry. So maybe you take that trade. I'd skip it. You can see it doesn't go very far. And then we bounce. You could say, hey, there's a failure here, but it's all that being below the EMA. Don't take that. There is a higher low right here, but it's an inside bar. Don't take that either. We run up, break, new high. If you'd had a little better signal bar, maybe you go short there. There is a lower high here, but we've already touched the EMA, and you got like a triple bottom there. Um, so I don't think I want to take that. And somebody will probably say, well, what about the triple touch there, triple test, and the big bullish bar? Well, you just had a break in a new high, so you got to be real careful with that one. And you can kind of see let me just draw it here. You can see there's a little bit of a range right there. And so when it came back, if you want to go long, it has to hold up here, and it doesn't. So we come back down. We're still outside, yeah, but you got to be real careful. It's not like a bounce where you're expecting inside the trend line where you're expecting prices to go higher. They could make another leg up, but generally it's not going to correct all the way back down here to make another leg up. It would have made the first leg after the break, come back to maybe here, and then made a second leg. Comes down here, it fails out the downside. And then I like this one for a trap. There's that little break lower, and it fails instantly and turns up. And look how bullish that bar is. You do have to go long up here at the very highs, and that's the reason I made it green. But that's one that's got people trapped, and you can see it kind of once it breaks out, it kind of moves on up and goes back to the high. And you're expecting prices to maybe come back up here to this. Actually, I take that back. You didn't really have this range in place yet. I mean, there's some resistance over here, but you don't know this is a range yet. So you're not, once this made this new high, you're really expecting prices to probably either go sideways or down. But it does run up, comes back, gives you a first entry, gives you a second entry, and when it breaks higher, it fails instantly. Turns down. I would have liked it better if it broke on through, but I still like it. If it breaks below there, you're going to get a scalp probably. But you can see it acts kind of like a little range and snaps back. But then you get a triple test with a big bearish bar, and you got plenty of room to get out, and that's the trade to take. And you get a runner on that one. Drops down, just kind of chops sideways. You can't trade that. I don't see anything there, but then you get that failure again. Looks kind of like this one, and there was another one somewhere. It's kind of a repeat pattern. I like going short there. We drop back down, and this is when you kind of realize it bounces down here again. Hey, we probably got a range going, but this is a longer term. I mean, this lasted from 11 o'clock to 12:30. So that's an hour and a half. That's a fairly long, even though this is still kind of rangy, this is a fairly long trend. So this was a pretty good opportunity to trade. But notice you're working up here. You actually get two legs back here. This one was tempting, but it's still below the EMA. But it moves up and it comes back again, and it really gives you a triple test and a second entry long. I still marked it green because that signal bar is close. I don't know if that's in the upper 1/3. Maybe it's a tick or two off. So I marked it green. If it had a good signal bar, that's a blue all day long. But if you're just patient, a few minutes later, come back and you get a first entry, second entry. But technically, that just looks like sideways. So that looks like one leg down, first entry, tries to go lower. It fails at the key entry point, which is the trend line right there. It gives you a second entry long with a very bullish bar. And you can see they trapped the shorts there. Look at that. That bar right there shows you that, hey, a lot of shorts came in here thinking they'd found a top, and boom, it takes off. Then it comes back. First entry, and they trap the shorts one more time. It breaks lower by a single tick. When you see that one tick turn and then goes straight up and keeps going, you know you got them trapped. Put you a buy stop one tick above that bar. And if it goes out that bar, it's going to zoom up just like it did. And I don't think I'd wait till this bar closed because that's, oops. That is 29 ticks right there. So don't wait on that one to close. That's just too big, and it's right into these highs. But when it broke higher right there, if you know how, if you understand what's going on, take that trade because you're going to get enough momentum from a trap right there that you're probably going to get that one most every time. And you do get a close outside a new high, but it comes back and gives you another second entry right at the key entry point. I'd probably take that one too. It does come back and give you a higher low. by that time it's too congested. You can't enter again. And you would have had to ride this out, which would have been fairly scary. So most people probably would get stopped out here or exit. It's hard to ride that out, but that's why we put our stop where we do and don't move it. And you can see we will survive that. You get your scalp, and it still turns down pretty quick, but you still had a winner there. Those second entries with the trend at the key entry points are just really powerful, and you have to pay attention to them. And I don't know why I got a green down arrow right there. I must be half awake doing this. Putting these trades on there, it should be a green up arrow. But then it comes back and gives you a first entry, second entry, and there's really a triple test across there. So I didn't draw my line, but you can clearly see it right there. Second entry long, triple test, way away from the EMA. Odds are you can get a scalp out of that, but look at this thing go. Again, they run the shorts. They get all these shorts piled in here. You can clearly see 2 legs down right there. And boom, off it goes. Technically, the second entry counts from here, but there's 2 legs in this. There's 2 legs down here that make 1 leg. Then there's a 2-legged correction in the middle, and then you get another leg down that also has 2 legs in it. That's perfect price action, moves in 2, and it just looks like craziness right there. But if you understand price action and you get good enough to see this chart, you'll see exactly what's going on there, and you'll understand it. And boom, off it goes. And then we try to go lower once. First entry, then you get a second entry, and it fails real quickly. Generally, you want this to be on the other side. I marked this one green because we have the range here, and 2 attempts to go higher at the top of the range is probably going to send us to the other side. So I did mark that one. I marked it green though. And then of course it takes it a minute, but we just take off. You don't get any big runner on this one, unfortunately, and you don't really get another good opportunity to enter it till we're all the way down here on the lower side of the channel. But this thing's so weak, it just keeps going. I don't think you want to trade that. This actually broke higher and turned down, so maybe you take that one there with a triple test in that little channel. I wouldn't. You definitely can't go long on this bar because it doesn't qualify. But if you trade it on engulfing, maybe you take it. You do try to go higher once, twice, and there's a failure right there. But again, that's just too sideways. And you're looking for prices are way overdue to come back here. And then finally they do. And notice you make a new low. First entry, second entry. Yeah, we get a break, but it's right at the key entry point. Look how bearish. You can ride that back to the EMA almost certainly. Then you get a lower high here, but unfortunately that signal bar doesn't qualify because that's a great move. Probably would have got you a runner there, and with a decent move on it on top of that. And then notice how we came up short there, and we did get the break, and then we come up short here again, but we got at least 2 legs down there, and then this thing reverses. That's what you're hoping for. There's no reversal pattern here though. But finally you come up here and you get a first entry, you pull back. There's a second entry right there, but when it turns lower again and then turns up, again, you probably got them trapped, and you got the trap because look at it go right there. The shorts are, people that aren't paying attention think, hey, we're still in a downtrend, but hey, we know better because we know how to read the chart. And you can see that channel with a break and the new low, and suddenly we're going the other way. So we know better than to try to get short there. And you got a lot of people that are donators that don't, and they just donate to the cause. That's a perfect trap, easy trap. Look at it go. The shorts are running for the hills right there, and the smart traders are piling in and riding it up. And then we hit the other side, we get a little overshoot, and boom, off it comes. Overshoot usually leads to a break, and sure enough, there's your break. You don't want to go short there. You're waiting on a long, and then you push up, pull back, and get a higher long. There's actually a first entry, second entry, but you can't go long there. But then you get the higher low with a good signal bar. I like that one. And then you get a second entry. You get a break here, but that's a second entry, and you'd expect a new high for both this one and this one. Generally, I don't draw this blue channel on the retest, but just to show you that it still sometimes plays out perfect, there it is. But I like that second entry right there. And that could be the center of a pattern. So that could mean you're getting a move like that. We don't quite get it, which tells you we're probably going to go a lot further in the other way. But that would have been your target until it turned down here. So generally, I probably would have exited just prior to this high, because you're probably going to make a new high, which you do. You make a new high here, and it's the new high for this channel and this one. And you see what happens, it instantly turns. So that's probably your best exit point. Sometimes it'll push way on up and you'll say, oh, I knew I should have held on. And next time, and instead of taking your profit right there in front of that high, next time you ride it up, and guess what happens? It turns down before it gets there, because most of your smart traders are taking their profit early. You can see they started taking their profit right in here, pushed up one more time, and boom. So this was 30-minute chart lesson, so I'm going to wrap it up. It's been first full week in a while, so we've had some I've had some vacation and holidays and things like that. So anyway, I hope you had a good trading day. I hope you learned something today. I'm going to wrap it up for today, wrap it up for the week. We'll be back Monday, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next